What's up, guys? Today we'll look at the price of Bitcoin not only in the short term but also we'll try to zoom out a little bit and see like a more or less global picture. Well, locally, if you remember, we still making a lower high, one more lower high. We couldn't make above the resistance, and we constantly testing this support over and over again, something like $9,500. As you know, the more often we test the support or resistance, the more likely this level will be broken eventually. Right now, yeah, it was resistance before, now it is support. So yeah, it still has a chance to hold, but well, if we'll test it, like maybe we'll go once again to test this resistance and again return to the support, I wouldn't bet that this support will hold. Probably more likely this support will be broken and we'll see maybe something lower than even $9,000. Moreover, on a 1 day time frame, you see it looks even more ugly, like those engulfing candles. Every time when we try to push higher, it just got broken to the downside over and over again massively. And if we look at the shorter time frame, then we'll see that it's actually happens very, very fast. Like this was maybe I don't know, few minutes candle, and in fact, this is how you collect the liquidity in the order book. So like people who went long from here, or like set the long orders from this area, maybe the support, hopefully support from this resistance or from this resistance or even from this resistance, they all went in a loss. Some of them got closed their positions actually after the price went below $9,500. A lot of stop orders were here, I believe, or even liquidations. So after that went up again and like rinse repeat. So now we are having pretty much the same situation, but it's approaching the extreme, and I think soon the situation will be resolved. A little bit of the pattern analysis. So currently we are having so-called complex head and shoulders top by Bulkovsky, and yeah, it's not exactly the same patterns as he used to use, but still we have like multiple shoulders, we have basic symmetry, so and many small features. You can look at these comments, how the pattern resembles the pattern from his observations. And again, statistically it performs very well. It has rank 9 of 53 when the 1 is the best. So according to this, probably the target will be below $9,000. Well, maybe 8,700 or around that. And yeah, we need to see the confirmation. We need to see the breaking this level of the neckline. If we'll see that and we'll hold below that, so yeah, it's very likely that we'll go much lower. But this is the local picture which we're talking about, and I would like to show you some more or less global picture when we'll zoom out a little bit and see some major indicators. Here we see the RSI, stochastic RSI, you can open stochastic as well, and directional movement index. And here I just want to compare the situation on a weekly time frame with the previous cases when we had some bull markets or reversal points. So for example, over here, you see here was the accumulation of our growth which we had after that, after the drop from $6,000 to $3,000. So here you see RSI was going up, starting from pretty much $3,500. It was going up and it went above the 80 level of 80 and reached the overbought zone, right? So that was pretty much the point where we're showing that the trend is very strong, the bulls are very strong, but we don't see much of the corrections on RSI at all. And at the same time, stochastic RSI was overbought for a very long time. And although you would expect this to go lower at some point, but it kind of represents the overextension of the bull trend over here. And right now what we can see, RSI is not in the overbought territory, and it's actually started to go lower. Like, of course, you can find many examples on the previous bull market when it shows pretty much the same pattern, like here or even here. But at the same time, you see, we see the stochastic RSI printing the bear crossover, right? So it goes lower, and if it does, usually, again, according to the same examples before, if it does, then we see the correction at least something like this, or maybe 20 to 40%. So right now we have something like 10%, and yeah, we have still a lot of room to correct lower and lower. And furthermore, the DMI is very, very representative in my opinion here. So what you can see is that although the positive DI is above the negative DI, meaning that yeah, we have a bull trend, but you see the ADX is only at 20. It went down to 19 and it just have a little bump here. And if it is below 25, it actually means that the trend is not so strong. The trend is weak. Where we are at 20, it's very well, not very weak, but rather weak. I would say it is very similar to what we have over here, or other place I will show you later. But still, you see, the price made some rises during the bear market here, but at the same time ADX was always going lower and lower. We had some bumps here as well, but then we can continue to go even lower. Just compare it with the case of the previous massive bear market. You see, for example, here the price went to, I don't know, 50%, not a 50%, a lot, right? Like 75% drop here. And then we had the corrective rally to the upside. Pretty fast, pretty strong. And what we see, the ADX didn't go higher. ADX continued to go lower and lower and lower. Although we saw some actually bull crossover here when the positive ADX went above the negative one, but then not since, but ADX didn't show any strength and we continue to go even lower than before. So I would say that right now it doesn't show any signs of the strength on the weekly time frame. At the same time, we see some start of the correction shown by stochastic RSI, stochastic and RSI as well. We have some bearish patterns which we already discussed. So although I don't think that it's like more than 50% possible that we'll go below $6,000 or even $3,000, moreover $3,000. But I would say that we should be ready for a deeper correction, and then we should see how the price will end with this correction, whether it will be like more or less reasonable, or it will stay at some key levels, maybe moving averages and so on. But if we'll continue to see the bearish trends, we will not see higher highs and so on and so forth, then it might be very, very ugly, guys. One more thing is that on a weekly time frame, if you look at the TD sequential, then currently we are at the green 8. So as soon as we will make a little bit higher from here, then it might be a green 9, which although might be an imperfect one, but still this green 9 means that it is reversal point of the whole move to the upside. This reversal point might bring us to much lower values. Moreover, if you look at the monthly time frame, then what we would see here is that if we will continue to move a little lower, but even right now, this candle looks like a doji, which pretty much looks like this. Well, it might be actually the long-legged one, but still all of them are indications for the reversal of the trend. That was the upward trend before that, right? So guys, it's actually quite alarming. Moreover, if you look again to the Heikin Ashi representation, then on the weekly time frame, you would see that although we had a lot of the green and rather bullish candles so far, but current one already has a look like we are ending all this move. So you see here some more bearish signs at this point. And the last thing which I was going to show you guys on a weekly time frame, this is MACD. So you see people are looking at the crossovers, the bearish crossover, the bullish crossover and so on. But if you actually look closer, then you would see that, for example, the bottom of this point was before this crossover. The top was before this crossover, the bottom here was before this crossover, and so on and so forth. So actually the top of this point, for example, was at the point where the histogram turned to decrease. So like this was a bright green and it started to approach zero level and turn to red. And the same here, the bottom was at the point when we saw the change of the color and histogram started to approach the 0 point. The same here, and so on. And right now what we are seeing here is that, yeah, again, the histogram turned from like bright green to this less bright area. And yeah, that might be at least again the indication of the deeper corrections, at least something like this, or maybe the example of previous 2016, 2017. So that is pretty much it. And I need to update you on my trades on SnapX. The last one is still open. I opened the short at $9,934 and currently it is in a profit $347 and the margin was 120, so it's about almost 3x on this position. And the less greedy person would probably already close it, but I will keep it for a while. I probably will bet on the fact that this support will be broken. If not, then my stop order is at 10,056, so I will be okay if it will be closed by the stop order. It's the game of probabilities, so you would have to play that. And yeah, of course you can track all of that on Telegram and Twitter. And by the way, at this point you should already receive the Snap Points bonus Snap Points if you used my referral link or the referral code. And yeah, if you didn't, let me know on Telegram. We will resolve the issue, but probably you receive all of that. It's like $10. And yeah, that is now it for today, guys. Hopefully we will see some green price action, but if not, then just trade accordingly, use your stop orders, and I hope that it was useful. Thank you for watching.